Hello and welcome to this Money Control live stream. You're watching Opening Bell with me, Nandita Khemka. Brand new day, and the cues not looking all that encouraging, given the fact that risk sentiment remains on the back foot. Investors are turning more and more risk off as tensions between Iran and Israel escalate, and the conflict, mind you, has entered the sixth day, which is why we saw crude prices surge over 5%, almost $77. That's where the Brent crude is at. It's a 5-month high. Remember, the top was $78 after Israel struck Iran. But now the center stage, is on Trump. In fact, is the one that takes center stage, given the fact that he has given out some stark warnings to Iran, unconditional surrender. That's what he's demanded, and of course there is chatter that the US could join this conflict as well and perhaps carry out some strikes on Iran. But that's an evolving situation. The street is on edge. We are watching out whether or not that happens or not. But for now, Israel and Iran continue to trade strikes and missiles. So yes, that conflict hasn't de-escalated, and the signs aren't looking encouraging on that front as well. But for our markets, we did slip below that 24,900 mark, but we held on to that support of 24,800. Now, of course, the GIFT Nifty is hinting at a, subdued start. So 24,700, that becomes the next support. Of course, we'll touch base with our technical expert and ask him what are the levels to watch out for if at all we break below that 24,700 levels as well. But, lots to watch out for. One stock that will be in focus will be the shares of BSE. SEBI has given NSE the nod to shift its F&O expiry, weekly F&O expiry to Tuesday, and that means BSE F&O contracts will expire on Thursday. So yes, that's something that the stock will be reacting to. That would lead to some bit of loss in market share, loss of volumes as well, which is why we are expecting the stock to be under pressure today. Lots to watch out for, but your queries will also be in focus. Keep them coming in. We'll take stock of them as well. Quickly take a look at the top headlines before we move any further. Wall Street ends Tuesday's trading session lower in the face of mounting conflict between Iran and Israel. The Dow sheds nearly 300 points. Traders also brace for the Federal Reserve's rate decision due later today. Status quo, that's what's expected, but the dot plot or the forward guidance on rate cut will be crucial. Asian markets open largely lower as the Iran-Israel conflict dents sentiment. Stocks are on edge, and as investors watch out for the next steps from Trump following his demand of unconditional surrender from Iran. The GIFT Nifty indicating a lower start for our markets. Crude oil prices rise on worries that Iran-Israel conflict could disrupt supplies. Brent trades at 76, I think close to $77 right now. Gold prices steady as a firmer dollar counters Middle East tensions. And US President Donald Trump gives a direct message to Iran, calls for unconditional surrender of Iran's supreme leader. Now, Iran vows to retaliate while Israeli media reports that US is likely to join the war against Iran tonight. And shares of BSE in focus today as SEBI has approved Thursday for its weekly expiry. NSE's weekly futures and options contracts will expire on Tuesday. All right, 7 minutes to go for the markets to open. In the pre-open, we can see the Nifty below that 24,800 mark, just about a 65-point cut on the index. It is expected that we will start with a negative bias. Sensex showing a cut of 260 points. So yes, the texture of the market will be on the downside in tandem with the global markets. But looking at yesterday's action, we did close at the day's low. The Nifty, as I mentioned, was below 24,900. The mid-cap index underperformed with the advanced decline ratio firmly in favor of laggards. All the sectors, barring the IT pack and the defense sector, were in the red. Pharma was one sector that extended its decline after Trump's comments that pharma tariffs are coming very soon. We saw a knee-jerk reaction with the pharma index tumbling to day's low, but came off slightly from there, and we ended lower by 1.8% or thereabouts when it comes to the pharma index. On that note, let me bring on board our expert for today. Joining me is Ruchit Jain, Okay, so he will be joining in. There's some technical issue. We will touch base with him. But understand the cues then. Some stocks that will be in F&O ban today. No new additions or deletions. But a whole host of stocks will be in F&O ban. Aditya Birla Fashion, Birla Soft, CDSL, Chambal Fertilizer, IRDA, RBL Bank, Titagar, Rail, Hudco, Manappuram Finance. These are all the stocks that will be in focus as they will still remain in the futures and options ban. Yesterday, put call ratio fell to 0.95 vis-a-vis 1.14 in the previous session. In terms of the fund flows, FIIs turned net buyers yesterday. So we will take heart from that fact, because over the last few sessions we had seen FIIs turning sellers, but yesterday they were buyers to the tune of almost 1500 crore rupees in the cash market. DII buying continues, 8,200 crore rupees worth of equities bought in the cash market. As I mentioned yesterday, quite a few stocks were also in focus. Pharma was in focus as comment from Trump took a toll. So Dr. Reddy's, when the news came out that Trump had made that statement, Dr. Reddy's tumbled almost 4%. It was a sharp decline, but it managed to recover some ground, although it was a top Nifty laggard, but it ended lower by 2.5% or thereabouts. But on that note, I think Ruchit is back with us. Joining us, Ruchit Jain of Motilal Oswal. Ruchit, lovely chatting with you. Given the fact that there is so much happening on the global front, of course, we are reacting in tandem with global markets. But the good part is that till now we've been able to defend that 24,800 level. But today the texture is on the downside. We can expect the Nifty to fall below that level as well. Now, what would be the crucial level you'll be watching out for, if at all 24,700 breaks?
Yeah, hi, very good morning, Nandita. Well, no, we have seen that markets have seen some reaction to the global markets, rising geopolitical tensions which are there. But what we have witnessed that on the index front, we have slipped more into a time-wise corrective phase rather than price-wise correction. All the dips that are coming towards the 24,500, 24,450 range in last 1.5 months are getting bought into. And on the higher side, 25,000, 25,200 is acting as a resistance. So I believe that market have formed this broad range in which until we see some escalations coming down on the Iran and the Israel war front, we would see this time-wise correction in the short term, and after that we would see a resumption of the broader uptrend. Now, even if you look at the recent up move since the month of April, since the first week of April, the mid-cap index had already seen a decent up move in the month of April and May. In just 2 months time period, the index had Nifty Mid-Cap 100 index had rallied about 20-21%. So we can't expect every 2 months, the index repeating this kind of up move. So definitely there would be some phases where we would see some corrections. More or less, I think we would see more of a time-wise correction on the index. But yes, the broader trend remains positive. So 24,700 would be the initial support for day trading. But for the short term, in case if that is also breached, I think 24,500, 450 provides a very crucial support. Until that is intact, we believe that it's a market where the dips towards the support should be bought into.
Okay, the dips should be bought into, but just about 2 minutes to go for the market open. But I want to get in your thoughts on the shift in expiry days. Very quickly, how does this shift, for NSE to Tuesday impact investors? In simple terms, what happens to volumes and how does it impact the lives of F&O investors? Could you quickly take us through that first?
So I don't think there would be a significant impact on the volumes. It's just that the traders have to adjust their expiry moves, and especially those who are doing automated trading have built system based on the Thursday expiries or Tuesday expiries for Sensex. I think they have to do that shifting, and backtesting the data would be a bit difficult because usually we have seen that since a long period of time Nifty was expiring only on Thursday. So I think that backtesting would be a bit complicated part for those who are doing automated trading. But apart from that, I think the volumes will not be greatly impacted. It's just that in the near term or in the initial maybe couple of weeks, where it would take time to make a mental shift, or the shift in the strategies to change the expiry day. But I don't think that would have any greater impact on the volumes in the option segment.
Okay, and what about BSE? What level would you be watching out for today? Because the stock had hit a fresh record, but last 5 days it had seen consolidation. But today, of course, we expect a knee-jerk reaction.
So yes, the stock is indicating a gap down opening. The 89 days exponential moving average major support is around 2200 level. So let's see if the stock manages to find a support around those levels, around 2200.
Okay, support levels around 2200 for BSE. With that, of course, first ticks coming in. We've started with the negative bias as was expected. We are just around that 24,800 mark. So it's a 70-point cut on the index. For the Sensex, it's down somewhere around 200 points. So thereabouts, the Nifty Bank Index sees another 130-point cut at the current juncture. And breadth is even Stevens very early to really comment on how the trend will turn out when it comes to the market breadth. But right now there are more advances than declines, 1:1, but skewed in favor of gainers. Let's see what some of the other sectors are doing, because yesterday, in fact, as has been the case over the last several days, IT has been providing support to the market. That's one sector that has gained in the last 9 out of 10 sessions. Today, although right now it's seeing some mild losses, but this is one sector that has provided some support to the market. All the sectors barring the real estate pack are in the red, and the kind of cuts that we are seeing is in the range of 2/10 to 3/10 of a percent. So autos are down 3/10 of a percent, FMCG down almost 4/10 of a percent, IT index, as I mentioned, just 2/10 of a percent lower, metals, pharma, PSU banks. So all the sectors are trading in the red as we speak. Of course, investors are turning risk off in the wake of the Middle East conflict and how things pan out on that front, whether US joins this conflict or not, that's a big question. But as we speak, the Nifty has managed to cut some of those opening losses, and it's at that 24th, above that 24,800 mark. So doing fairly okay, not such a bad opening, so to say. But we talk about the breadth, it has now gotten skewed in favor of laggards. In terms of gainers, IndusInd Bank is one stock that's gaining. There's been some bullish or positive brokerage reports on this particular counter, which is why it's reacting 2.4% higher on this index, on this stock, I beg your pardon. ONGC, Wipro, Shriram Finance, HCL Tech, Asian Paints, Eternal, these are some of the other movers. On the flip side, you have other banking names not doing well. So Kotak Mahindra Bank, HDFC Bank, they are on the losing end, and so is Axis Bank. Power Grid, top Nifty laggard. Infosys has come under some bit of selling pressure today. Eicher Motors, ITC, GSW Steel, Nestle, these are some of the other laggards. But talking about the bank Nifty, Ruchit, didn't really touch upon that. But if you look at the charts of a bank Nifty of the last 5 sessions, mildly underperformed the index. 55,650 is where it's at. What's the support here? And for an IndusInd Bank, would you be a buyer? The stock is up 3.5%.
So the broader trend for the bank Nifty does not seem to be much negative. From current levels, there's a good support around 55,000, 55,100 range. And till that is intact, I think whatever corrections that we are witnessing seems to be more of a dip within an uptrend only. So as of now, I think overall trend for banking index also remains positive. But just what we spoke about Nifty as well, get that in the short term, it would be more of a time-wise correction which would take place in the indices. So definitely in the near term, I think Bank Nifty also would go through some consolidation phase with 55,000 acting as a support and 56,800, 57,000 being a resistance on the higher side. Now, as far as IndusInd Bank is concerned, no, we need to see a breakout above 800 and the recent swing highs in the stock, which was around 855 to 860. And once if the stock manages to surpass that level, then we can expect a pullback move in the short term. So as of now, could be one stock to keep on the watch list. But if the stock manages to surpass 860, then one can look for trading opportunities with a positive stance.
Okay, that's the view on an IndusInd Bank, and overall the trend on the banking index doesn't look all that negative. But let's talk about one stock that was in focus yesterday as well, and it's in focus today as well. It's Hindustan Zinc. The company unveiled capex plans yesterday of 12,000 crore rupees. The stock was down 5%. Today there's been a block deal in the counter. 1.7% equity has exchanged hands worth 3,323 crore rupees at 460.5. This has happened by a block deal window. The floor price was at 452.5, which was at a 7% discount to yesterday's close price. Hindustan Zinc 10% cut over the last two sessions. It's at 456 or thereabouts. How are the charts looking? Do you think there's been some bit of a major breakdown, or do you think it's pretty much going to remain sideways after this?
So I don't think there's a major breakdown in the stock because already we have seen a significant price-wise as well as time-wise corrective phase over last few weeks. Then we witnessed a run-up move or pullback move from 420, 440 to 520 recently. So I think this could be a move where another 200 DMA would come into support now, which is around 450 kind of levels. So we have already seen a gap down opening today because of the block deal, but price-wise downside seems to be limited here on. At the most, I think we could see some sideways movement or a recovery again from this 450 support mark.
Okay, no major breakdown on the charts of Hindustan Zinc. I want to get your thoughts on a polycab. It has signed almost a 6,500 crore rupee agreement with BSNL for Bharat Net program, but the stock hasn't gone anywhere, Ruchit, in the last 1 month or even the last 5 days. Stock is barely moved. At these levels, what do you do with the polycab? Is it showing any kind of trend on the charts?
No, frankly, it's more of a, if you look at last 15 days, the stock has not gone anywhere. 6,250 has been acting as a support and, as a resistance, and 5,800 has been acting as a support. So seems to be more of a sideways trend only in the stock. And today, as you rightly pointed out, that in spite of such a positive news of such a huge order, we have not seen follow-up buying coming in as of now in the opening. So wait for a breakout above 6,260, which is the recent swing high. If that surpasses, then you can expect an up move in polycab.
Okay, that's about polycab, but some of these stocks had seen knee-jerk reactions and sharp cuts when Ultratech had announced its entry in this segment. But talk about a delivery as well. CCI has, Competition Commission has approved acquisition of at least 99.4% stake of Ecom Express for a total of 1,400 crore rupees or thereabouts. The stock is up 1%, 360 or thereabouts. Any of these logistics names catching your attention on the charts?
Not many, but delivery within this spec, in fact, looks positive, where we have seen a good price volume action in last few months. There is a high top, high bottom structure which is getting continued. All the dips or corrections that we are seeing, we are not witnessing any volume-based selling coming over there. So 340 remains a very crucial support, positionally for the stock. Until that is intact, I think the stock should do well positionally. So if one is looking more from a positional perspective, then within the space, I think delivery could see a relative outperformance.
Okay, that's the view on delivery and a relative outperformer within the logistics pack. But before we move on to queries, one more stock, Newland Labs. This stock has got SEBI's administrative warning for insider trader violation. No knee-jerk reaction as such. The stock is down 1%, but in the last 5 sessions, it has seen quite a bit of selling pressure, 10% cut. At this level, 12,400. Should one really look at the stock, because it had seen good traction in the last 1 month, but off late has come under selling pressure. Is this a good buy on dips candidate?
I think one should avoid as of now, because there's no trended phase in the stock. The stock is consolidated in a broad range over last few months. But whenever the stock is coming around 13,500 kind of range, we are witnessing selling pressure at high levels. So at the most, I think 13,000 to 11,000, this could be the range, broad range within which we could see some more consolidation.
Okay, avoid, that's the call, and it could see some more consolidation. Newland Labs, negative news flow, though the reaction hasn't been all that pronounced. But let's shift focus to our viewer queries then. Viewers keep sending our queries. We will try and get them addressed. The first one I spotted was on Dixon Tech coming in from Naveen. All these EMS names, out of them, Dixon Tech had been witnessing some bit of selling pressure in the last 1 month, 6-month charts also indicating a 25% cut. The stock hasn't really seen, any kind of a rebound, so to say. after the kind of selling pressure it has seen in the last 1 month. Your thoughts, is it expected to remain in this downtrend, or do you expect some bit of recovery after spending so much time in the negative territory?
Yes, for now, I think seems we would see some more, time-wise correction in the stock. The stock has recently seen a correction and it's hovering around its 200 DMA support now. But around this support, as of now, we are not witnessing any kind of price volume action which indicates the buying interest over here. So I think 13,500 to 15,000 remains a trading range where we could see some sideways movement over next few days.
Okay, I expect some more weakness here on a Dixon. Hope that answers your query. The next one's coming in from Pooja Khanna, and she has some shares of Vodafone Idea, which she bought at 9.5 rupees, 9.6 rupees or so. Wants to know what should be the stop loss and exit level. The stock is trading sub 7 rupees at the current juncture. I think it's at 6.5. So almost a 3 rupee loss on this stock. What should she do? And in terms of stop loss, what would be the level?
So I think no, this is not one of the stock where we have seen any kind of trended up moves in the last few months. So overall, the stock remains an underperformer compared to the broader markets. If you want to keep a stop loss, then it should be below 6 rupees. Of late, we have seen the stock taking support around 6.5, 6.4. So I think 6 rupees would be a reasonable stop loss for the stock. But if you are looking for any fresh buying, I think no one should not consider for adding more investments over here, but rather for existing positions, you can keep a stop loss below 6 rupees.
That's the stop loss to watch out for, 6 rupees. I hope that answers your query, Pooja. Move on to the next query coming in from Satya CK. Wants your thoughts on a PNC infrastructure. Looking at the charts, can't really see any kind of a trend, so to say. But at 300 levels, would you take a positional bet here? Should one take?
Not advisable to take fresh bets over here, but any existing positions are there, those are already long. They can hold with a stop loss below 280. Broadly, in the recent pullback move, we have seen the stock showing a pullback along with the broader markets in last 1.5 months. But the stock has not yet surpassed the 200 DMA resistance. In fact, if you look at the recent swing high 4-5 days ago, then exact the 200 DMA has acted as a resistance. And hence, until that is cleared, one should not look for fresh buying, but existing positions can be held only with a stop loss below 280.
Okay, that's the view on PNC infrastructure. Hope that answers your query. Alex, your query up next then. He wants your thoughts on ONGC and Oil India. We've seen a sharp surge in crude prices, right? 78, that was where it topped out, at least, in the last few days. But in the wake of the crude spike, which bodes well for upstream companies, ONGC and Oil India, do you see more upside if crude, goes up from here?
I think yes, especially ONGC, seems quite attractive over here because couple of things. One is the rising crude oil prices, which should benefit these upstream companies. Secondly, if you look at these ONGC, the stock has seen a decent corrective phase in September, October last year, and has not yet participated in the recent market rally. So the indices have moved up, but the stock has not seen any kind of significant up move yet. So the risk reward ratio still remains favorable for any kind of reversals and a continuation of the up move from current levels. So the downside seems to be very limited, but this is not a high beta stock, which one should expect immediate short term big gains in the short term. But a slow and gradual up move could be expected in ONGC. So one who can buy it for positional basis, or if one wants to add it for a portfolio even for longer term, I think this recent correction and time-wise consolidation provides a good opportunity to pull long over here. So there is a risk reward ratio definitely seems favorable to create fresh longs in ONGC at current levels.
Okay, that's the view. Can consider fresh longs on an ONGC. I hope that answers your query. Next one's coming in from K Naga, and he wants your thoughts on Bandhan Bank and RBL Bank. Both these stocks aren't very, very far from their 52-week highs. Your prognosis on how these stocks are expected to behave here on?
Look for Bandhan Bank especially looks positive. There is a higher top, higher bottom structure with price up move supported by good volumes recently, and no, 165, 170 is a good seems to be a good support base for the stock. So definitely, as we spoke about the banking space as well, that there could be a short-term consolidation, but the overall trend for the stock remains positive. So no one can look for buying Bandhan Bank with stop loss below 165 on a positional basis. And as the banking space resumes its uptrend, I think this should do well from current levels.
Okay, that's the view on some of these banking names. But let's shift focus to the real estate pack then. Saurabh Chaurasia wants your thoughts on a DLF. The stock has seen very good traction in the last 1 month, but in the last 5 days, kind of cooled off a bit. Today it's up 1.5%. Do you see the stock picking up momentum after a lull over the last 5-6 sessions?
So yes, Nandita, if you see the real estate space, and especially this some of the interest sensitive sectors have really witnessed a good buying interest. Post the recent RBI policy rate cut which we have seen. So I think some of the realty space such as BLF is there, Oberoi Realty is there, Loda is there. The downside seems to be very limited in these stocks. There could be some in between small corrections because the stock has already seen up move from 600 to 880 without any meaningful correction, but the overall structure remains quite positive for positional basis in realty names. So DLF in existing long positions are there. I think it's good to hold on these longs. You can expect a gradual up move going ahead as well.
Okay, that's the view on DLF. Expect a strong up move from here. But let's take up a query on a Tata Motors as well. This one's coming in from Kishore. Tata Motors, there was negative news flow in terms of the guidance coming in from JLR in terms of free cash flow and margins as well. The stock took a sharp knock. 2 days it lost some 7-8% or so. But the stock had seen a good recovery after 6-month downtake, and after hitting 52-week lows of 535 or thereabouts. But do you see this recent sell-off as transitory? And chartically, would you say that the worst is behind and the stock has already bottomed out?
Maybe I think price-wise downside could be limited. The recent low, which was from around 520, 530, that should not be breached. But there could be some time-wise correction in the stock still because in the up move, the stock has not yet managed to surpass this 200 DMA. Secondly, if you see relative performance compared to the other auto names, then I think Tata Motors have not shown signs of outperformance within the auto space compared to what we have seen in Mahindra and Mahindra, Maruti. So I believe if one has to take fresh long positions, then one can wait for some good price volume action to happen in the stock to confirm that the stock has resumed its uptrend. But otherwise, if you look at the other stocks from the sector, then I think Mahindra and Maruti are better placed than Tata Motors on the charts.
M&M Maruti, better placed on the charts. Hope that answers your query. But with that, we've come to the end of the query segment. Ruchit, before I let you go, recommendations for our viewers?
So I think IT as a space looks positive from here as well. We have seen a good positive traction in many of the IT stocks over the last few days. So relatively, we think that the downside seems to be limited, and we could see a gradual momentum picking up within the IT names. So within the IT names, we are focusing more on the large cap names itself, in which Tech Mahindra has seen a good price volume action and a breakout in last couple of trading sessions. So at current levels, one can initiate fresh longs and look to add if we get any dip towards below 1700 kind of level. So Tech Mahindra is one stock which one can buy, keep a stop loss below 1650 and expect a gradual up move towards 1820, 1840 in the short term.
Okay, those are the recommendations coming in from Ruchit. With that, Ruchit, would like to thank you for taking out time and joining in. Always a pleasure.
Thank you.
Look forward to our next interaction as well. Thank you.
Thank you, Nandita.
I want to quickly take a check. Thanks a lot. I want to quickly take a check on the markets. We've seen a U-turn. We saw a subdued start, but we are now back in the green territory. In fact, smart recovery from the opening lows, 24,900 back on the charts. Even the mid-cap index has turned into the green. And if you look at the breadth, extremely strong, 2:1. 1535 advances to 770 declines. So yes, it has been a very smart recovery. Just want to see if we can hold on to these gains or not. There has been a fair bit of volatility in the market. in the wake of the Middle East tensions. But as of now, what's lending support to the index are the likes of IndusInd Bank. There's a positive brokerage report. Nomura has upgraded the stock. The stock is up 4%. M&M, Maruti, Eicher Motors. So auto stocks are taking the lead. Four out of the first 6 Nifty gainers are from the auto pack. M&M, Maruti Suzuki, Eicher Motors, Bajaj Auto, Hero Moto. So all these stocks are doing well. Sun Pharma is also in the green. ICICI Bank in the green. Shriram Finance trend. These are some of the movers. So yes, looking okay given the kind of opening we had this morning. We have made a smart recovery, but what does the way forward look like from here? Is the volatility here to stay, and will the market gains be capped here on? Let's understand the fundamentals. Joining me is Manoj, Bahety, founder and fund manager at Carnelian Asset Management. Manoj, lovely chatting with you. It has been quite a roller coaster for the market right from April, ever since the tariffs were announced. Then we had the border tensions, now this Middle East flare up. But still we have climbed all those walls of worry pretty smartly. Even now we are just about sub 25,000. We haven't really tested April lows. So I want to understand your thoughts here on. Are we going to stay in this range given the fact that we've digested all the negative news pretty smartly?
I think, first of all, good morning, everyone. Good morning to you and to your viewers. Thanks for having me on your show. So, first of all, if I would look the roller coaster volatility which was there, like since September of last year, we are seeing that there is series of geopolitical news which is causing the market volatility. I would say that if one looks beyond short-term volatility, market always gravitate towards core fundamentals. And if I would look at core fundamentals, all core fundamentals, especially for India, are intact now. So, and of late, market has started reacting to the emerging geopolitical tension quite mutedly. Like earlier, it used to do a sharp reaction. So in our view, even at current level, we see a good upside to the markets. If one look at core fundamentals or all core fundamentals, especially of India, macro as well as the corporate earnings. In fact, the last corporate earnings season has also been decent. The Q4 corporate commentary, especially when they have started giving outlook for FY26, the outlook was much positive vis-a-vis the outlook which we have seen during last corporate earnings. So overall, our stand remains positives on the markets.
Okay, stance remains positive on the market. You know why? The auto pack is really rallying. Just reading some flashes on CNBC, Australia is being considered as a possible alternative to source rare earth magnets. I think this is what is firing up the auto index. That index, by the way, is up 1.2%. And as I mentioned in my market check, most of the gainers on the Nifty 50, the first 5-6 gainers are from the auto pack. Do you see this as a resolution to this rare earth magnet issue that has been plaguing automakers, and it was expected to boil into something larger than for the entire EV ecosystem? How are you viewing this rare earth situation, and with this news, can we expect some reprieve? Should one look at EV makers, or is it too early?
I think if one look at the impact of rare earth magnets, it was mainly going to have a significant impact on the EV side. And if I look at the contribution to the profitability of EV in the overall auto space, it was not that big. So and many of the companies with whom we have interacted, they were having good amount of stocks of this rare earth mineral also. So over short term, anyway, the impact was not going to be much. Even on a medium to long term, the impact was more on the companies which were mainly on the EV side rather than ICE side. And with this alternate sources of rare earth mineral emerging, I think this the impact which we were seeing even on the EV side, that will also get addressed. And lastly, if you see the kind of I would say that when China has started restricting the supply of this rare mineral to the world, I think it was more a symbolic, because there was a trade negotiation happening between two large countries, China and US. So it was more symbolic rather than having any medium or long term impact. So I do not read too much into this issue, because this issue is going to impact mostly the companies which were mainly on the EV side.
Okay. All right. But how will you play the auto space in that sense? Would you look at two-wheeler makers, given the fact that monsoons are expected to be good, and of course there will be an uptick in. There's already been an uptick, or we are seeing signs of uptick in rural demand, and then the whole tax cut that was announced in budget would boost consumption as well. So, would you look at two-wheelers in that light?
I think with the recent interest rate reduction coupled with expectation of good monsoon, definitely two-wheeler segment, which was muted for quite some time now, this segment is likely to do well. Tractor segment is likely to do well, and over next 3 to 6 months, we are seeing good revival on the PV segment also. So overall, auto space along with the OEM manufacturer, we are quite bullish on the auto ancillaries also, which has got like dual engines. One is that as the domestic demand of two-wheelers, PVs, tractors picks up, that segment is likely to do well. Along with that, auto ancillaries have got good export story also from India.
Hmm. Okay, that's about autos. But one sector that has been lending support to the market is IT. It has been seeing or witnessing consistent buying in the last 10, 11 sessions. Would you expect FY26 to be much better? Because the tariff situation is still playing out, and India may be able to, or maybe in the final stages of an early deal with US by 8th of July. Do you think all this bodes well? Is that what's leading to this positive sentiment when it comes to IT?
I think IT sector, after the correction which has happened over last 5 6 months, definitely the IT sectors, few of the names have come in a good value zone, and this is the sector like which doesn't require capital for growth. The sector which delivers good ROCs, and as well as, I think one of the thing which was impacting this sector was mainly the fear whether the US tariff issue, whether it can lead to some kind of recession in the US. I think that fear is still persists, but mainly on the valuation side, we will be buyer in the select names in the IT sector, but we will be cautiously optimistic on the entire sector, looking at that the global headwinds as well as the US recession fear are also not behind.
That's true. The retail sales data that came out last night have led to recession fears in the US. But of course, we have the all important Fed rate decision tonight. Of course, he's expected to, Powell is expected to, hold interest rates
Hello.
steady. But given the kind of data that we have seen coming out of US, for the current year, how many rate cuts or when would you expect the first rate cut to come in from Fed?
I think means in terms of I would rather look at our domestic rate cuts than the US rate cuts. I think it will be a very complex scenario in US. It will be very difficult to predict, because I think the current Fed has its stand very clear that they are going to give preference to the inflation over growth. The kind of inflation which the US was grappling with, the current Fed was not in the boat where they were inclined to do rate cut. But also, given the fact that the current Fed term is likely to come to an end, so it all depends upon that what stands the new Fed tax. But I would not like to comment on the US Fed rate cut probability, because there are too many moving parts there.
Hmm. Got your point. But, talking about tariffs, yesterday we had Trump make a comment that pharma tariffs are coming very soon. We've been hearing about this, and again yesterday he's reiterated that. And at the same time, we've had US FDA stepping up surprise inspections of manufacturing sites. This morning we also had Glenmark getting some observations. There have been regulatory concerns ongoing, right? So how are you viewing the pharma space given these headwinds? How would you play this sector, healthcare sector?
I think we are having extremely positive stance on Indian pharma, especially the CDMO API space. There we see that. Hello.
Sure, go ahead. We can hear you.
Okay. So we are having a very positive stance on Indian pharma. In fact, three things one need to see. First of all, US as a country, they are having good amount of shortage of critical medicines. Secondly, if one look at the cost of manufacturing in US, it is significantly higher. And if one looks at cost of APIs and cost of CDMOs, it is just a percentage of overall cost of the final price of the medicines. So Indian companies, even if there are tariffs which are going to impose, Indian companies will be in position to pass on the impact of that tariff to their buyers. And we also have spoken to few of the large distributors in US. They were also of the view that in case if tariff comes, they will be able to absorb that tariff, and ultimately it will be passed on to the end consumers in the US. There may be some impact on the specialty branded medicines if the tariff gets imposed. In that case, there may be like sharing of the tariff impact between manufacturer and the distributor and the end consumer. But so far as API, CDMO, and various intermediates are concerned, I think Indian companies are very well positioned to pass on the impact of tariffs to the end consumer.
Okay, got your point. Last few questions then, Manoj. Do you have any view on the shift in expiry days? In that light, of course, how one should really approach exchange stocks. Particularly, I know you won't talk specific stocks, but for BSE, a Thursday expiry, so to say, would impact market share. Volumes will get impacted. As a result, EPS will get impacted. The stock is, of course, reacting to this news flow as well. But your any thoughts on how this would impact, or how should one really approach exchange stocks now?
So, see, we have not looked at the exchange stocks in detail, so I would refrain from commenting on that.
Sure. So, what are the key overweights right now, at Carnelian, and which are the pockets that you would say one should completely avoid?
So, we are having overweight on BFSI space, especially BFSI space. We are positive on tier one banks, which are having a good leadership team, good risk management practices, decent balance sheet, and a very strong asset quality. So we are having a overweight on BFSI, and especially within BFSI, we also like select NBFCs which have got a very strong liability franchisee. I think if we look at the BFSI space, there can be some short-term headwinds on the NIMs after the recent rate cuts which has been announced by RBI, because asset side gets repriced faster than the liability side. But overall, because of this rate reduction, we see a good amount of traction on the credit growth, especially the credit growth on the mortgage side, credit growth on the personal loan side, credit growth on the automobile side. So with that credit growth coming back, we see good profitability growth runway for the banks and select NBFCs. So we are having a overweight on the entire BFSI space, and we also like the insurance space within the BFSI, especially the life and health insurance space, because there also we see a large opportunity, untapped opportunity, and there are select good companies. So this is one space where we are having overweight. Secondly, we are having a good overweight on the entire manufacturing space. Within manufacturing space, we like, as I mentioned, we like the CDMO, chemical, pharma, healthcare space, and even select auto ancillaries, and as well as select capital goods and industrials. So within overall space, we are having overweight on BFSI and manufacturing as a whole. IT, we are slightly overweight for the reasons which I have just mentioned, that we are still cautious on the global macro headwinds. So IT, we are having position in select companies where we have seen good leadership change, and where we are seeing there is a good scope of margin expansion. So this is our overall
Sure.
stance in terms of positioning of Carnelian portfolios.
And any sectors that are a completely avoid?
At this point of time, we are avoiding defense, not because I think their valuation has run away far ahead of the growth trajectory which we can see. So defense is one of the space where we the other space within BFSI, we generally don't like the microfinance segment. So this is these and as well as I think select new age companies where uh, the valuation does not reflect the earning growth potential, where valuation has run far ahead of the earning growth potential, where the cash flow trajectory is far distant in the future. So these are the few spaces which we avoid.
Okay, got your point. And lastly, what are your thoughts on China plus one as a theme? Because with the US speaking tariffs on China and the tariff differential with India narrowing, do you think the China plus one opportunity for Indian exporters could lose momentum? Your thoughts on that?
No, I think, see, if one look at the China plus one theme, it is not only the theme which has been pushed by the government. Even if we look at the global companies, the kind of supply chain risk which these companies have on China. In fact, this theme has started post-COVID. In fact, at Carnelian, we have also launched our specific fund to capture this theme, which is a shift theme, where we have identified this opportunity where many of the global large corporates were grappling with their supply chain concentration risk on China, and they wanted to diversify their risk away from China. And if one look at the kind of reforms which has happened in India over last 10 years, whether it is GST, RERA, bankruptcy reforms, PLI schemes, as well as the kind of tax swaps which the government has started offering to the new manufacturing entity, the cost competitiveness of Indian companies have means have become even better than Chinese companies, whether one takes the labor cost, one takes the power cost, one takes the logistic cost. With all those things in place, and there is a global need of the companies to shift their supply chain risk away from China. So definitely in that, India stands at a very good advantageous position. And if I look at the kind of concentration which is in China, like many of the sectors, almost 35 to 40% of the global supply happens from China, where India is just 1-2%. Even if few percentage shifts away from China to India, it can double. It has a potential to double the entire sector for India. So this theme, we are going to see it as a decadal theme. And also, if one look at the tariff announcement closely, the kind of tariffs which has been announced for India vis-a-vis the kind of tariffs which has been announced for China as well as other competitive nations, I think India stands at a competitive advantage even in terms of the initial rates of tariffs which has been announced. So all those things put together, we continue to maintain our positive stance on China plus theme. And we again reiterate, this is going to be a decadal theme, which is going to create a significant wealth creation opportunities, many of the manufacturing sectors in India.
All right, that's the overall view on the China plus one theme. But with that, Manoj would like to thank you for taking out time and sharing all your thoughts with us. Always a pleasure, and look forward to our next interaction as well. Thank you for joining in.
Thank you. Thank you. Pleasure interacting with you.
Thank you. Well, on that note, we've come to the end of this edition of Opening Bell, but we've tested 24,950 on the upside. Just about above that 24,900 level right now. So a good recovery from opening lows. The breadth is looking fairly strong, although the mid cap index is moving in tandem with the benchmarks. The breadth is almost 5:2 on the NSE, advances at 1745 and declines at just about 664. So it's been a good U-turn. And of course, the auto pack leading from the front on the news flow, or government sources saying that Australia may be tapped into for rare earth magnets, comes as a reprieve for EV makers, and which is why we are seeing that the top 5-6 players on the auto players on the Nifty are among the gainers. But IndusInd Bank is another stock that's seeing good up move, a 5% up move on the back of an upgrade by Nomura. But all the other gainers are from the auto universe. Eicher, Maruti, M&M, Bajaj Auto, Hero Moto, all of them up and about. And the auto pack itself is up in excess of 1%. But completely timed out. Thank you for tuning in and watching Opening Bell. But you guys stay tuned to Money Control for all your other news and updates. And we'll be back with Closing Bell at 3:30 p.m. Have a great day.